Hi, I'm Vikki Crossland with the Aiken Homes team of Meybohm Real Estate in Aiken, South Carolina. With the higher interest rates, we're trying to address some creative ways to help buyers get into a home if they're looking. So we brought our expert in from Meybohm Mortgage, Jeffrey Johnson. Welcome to our channel.
Thanks, Vikki, for having me. Happy to be here.
So tell us a little bit about you, Jeffrey, and your background.
Yeah, absolutely. So I've been in the mortgage business about 10 years, and helping people achieve their goal of homeownership is something that I take great pride in. Had the ability to help a lot of families over the years, and it's just something that keeps me going. So lots of experience with a lot of different buyers, first time, repeat, and have a lot of creative solutions for the topic that you're bringing up.
Now, I have to say, you have brought a lot of different ideas to the table in the groups and the Meybohm. But I was wondering, with this market, with the higher interest rates, we don't like to hear that. And we kind of got spoiled with give me interest rates in the past. Do you have some creative ideas how to help a buyer who wants to get into a home to find some alternatives?
Sure, yeah. So in today's rate environment, where as of this week, the national average is teetering around 7%. When people hear that, they gasp, especially when they have friends and family who tell them, I bought a house in 2020 and my rate is 3.25.
Or 2.95.
Right, exactly.
Which was unbelievable and unrealistic into any market. Really.
It's really, really unbelievable. And if we're being honest, those rates are probably a thing of the past. We may never see those again. That's just the reality of the market that we're in.
True. When I started real estate, many years ago, I swore they would never be any lower than 10%. 10% was a great rate.
Yeah, absolutely.
The times have changed.
They have changed. So looking at a creative solution, a lot of times when buyers go into a negotiation to purchase a home, people always want something for less than what it's listed. So if a house is listed for $500,000, people are thinking, how can I get this house for $495,000?
Maybe lower than that.
Maybe lower than that. Yeah, absolutely. You've probably seen some offers come in that you were like, wow, this is disrespectful almost. But one creative solution that I don't think is being utilized enough is a temporary rate buy down. And one specifically is a 2-1 buy down.
Okay, tell us about it. So
instead of asking for a lower purchase price, let's just say we'll use $5,000 because it's a nice, easy number. So what if we said, hey, Mr. Seller, Mrs. Seller, we would like to purchase your home. Instead of reducing the purchase price, would you give us a credit for $5,000 so that we could use to temporarily buy down our rate? The numbers that we look at here are this. If I lower the purchase price of a house by $5,000, the monthly payment doesn't change really much at all. Let's say $30.
Okay.
Maybe $30. But if I were to reduce the interest rate for the first year by 2%, that moves the needle a lot more when it comes to monthly savings. So for the first year, that payment would be 2% less than today's rate. Okay. So let's say today's rate on average is 7%.
Okay, so that'd be 5%.
5%, yeah.
I'm good at math.
Perfect math. So 5% rate the first year, 6% rate the second year, third year returns to the normal 7% payment. The idea though is by the time we get to that 7% payment, rates have settled down, we have an opportunity to refinance.
But also, if you even look at it, hopefully if their income may be growing or some debts might be able to be paid off in that time frame. But the worst scenario is that 7%, but they had this opportunity to get into a house that maybe they couldn't get in versus paying rent or not being able to make their move.
Yeah, absolutely. And renting is something that people need to do, and that might be the best thing for people to do.
Right.
Might be better than buying for them at this point in time.
Everybody's situation is uniquely fine, but there's many people who want to be able to do something because they know in long term this is what their goal is, and if it can be done sooner versus waiting, it's good. And what I found historically, even the last few years, but even from 2024 to 2023, there was about a 6-7% increase on the average home sales price, and even on the median. So sometimes if they wait, they're going to be paying a higher price. Now, we never know what the future is going to bring, but when you put all this combination, you're paying rent and all that, sometimes a program like this might make sense.
Absolutely.
So I appreciate you sharing that. Is there any other ideas like this that you might want to share with us before we go on to another topic?
Yeah, so just to kind of tag along with that, people's thought process is as well, I'll jump in the market when the rates fall below, let's say 6%. If my rate starts with a 5 or could start with a 5, I feel really good about that. And I'm going to jump in the market. But guess what? You aren't the only one.
That's right.
There's going to be a lot of people that'll flood the market when the rates get into 5. And we saw sort of a picture of what this looks like back in 2020 when rates got into the 2s and the 3s. I saw videos and photos of cars wrapped around the block, buyers seeing the same houses. And what did that do? Bidding wars happened, so people wind up paying more than what the house is being listed for because you got more.
Or even the value just to get into a home.
And that's a whole nother thing. There were gaps.
Demand.
Exactly. Supply and demand, basic economics, right?
Right.
So having the mindset of I'll wait until interest rates get lower, you aren't the only one in that crowd. There's a lot of people that have that mindset. So if we can get into something like a temporary rate buy down now, and we can secure the property that we want now, we begin building equity from day one, which is better than our current rental position. We're not building equity in the rental.
That's right.
So that when rates do come down, we can refinance and we still have equity.
Right.
That if we wait, we've lost.
Well, we've done a video also about other things and home ownership brings to you. I mean, just your own self-worth, value, but that's a whole nother video.
Right.
Now, Brandi and I have come across a lot of times with buyers, sometimes having some confusion with all the different typing of loans out there. We got conventional, we got VA, we got government, we got USDA. Can you give us just a little briefing? Because sometimes they don't think some of those loans are for them, and they are, and some of them maybe not, but just kind of a little overview, and that would be helpful for especially the newer buyers that are not familiar.
Yeah. So I think everybody would like to have a conventional loan, primarily because that's what they probably heard growing up. Maybe you have a parent or uncle, aunt that said, hey, we have a conventional loan and that's what you need. But the reality is that not all loans are one size fits all. Everybody's situations are different.
That's true.
They've got different credit profiles. They've got different income earnings as far as are they 1099? Are they W-2?
Yeah, the self-employed people.
The self-employed folks, they always seem to confuse things a little bit.
Yeah, that's
kidding, of course. But the reality is that all these programs can be designed for different people. So for example, an FHA loan may allow someone that's got a little more debt. Maybe their debt ratio is a little higher than someone else, but the conventional program caps us at a certain percentage, but FHA allows us to go a little bit higher. So we may leverage an FHA. So basically the big picture difference between all the programs are the guidelines and the down payment requirements. So that's kind of what I would say to that.
Now on the veteran loan, you have to be a veteran.
Absolutely.
And so that's one thing is standstills, but so really, you really need to make an appointment with a mortgage company and talk about your whole picture.
Yes.
And decide what the best program is for you. Probably in advance of looking at a home. That would probably be a recommendation, would you think?
100% would recommend it. And even before you come to see me, what I would recommend that you do is whether you're buying a house by yourself or you have a significant other that you're buying a house with, that you guys sit down together and y'all talk about what your ideal monthly payment looks like. Because if we focus too much on rates, we could miss out on the benefits of home equity. We need to focus on what payment it is that we're comfortable making. Because if I can find a house that I love and I want to live in and get a payment that I can afford that fits in my personal budget, the rate still matters, but it's secondary to what my payment is. So figure out that monthly payment, come to me, we'll look at credit and all that stuff. And then we'll determine what your target purchase price should be based off of that payment.
So you're willing to take the time to have an appointment with somebody who's considering a home to help them figure out the program or the puzzle in buying a home and the financing.
You said it, it's a puzzle. And
it's a puzzle.
Happy to meet with them early on to help them to figure out that puzzle. Yeah.
We're gonna put Jeffrey's information up online, and his name is Jeffrey Johnson, Meybohm Mortgage. He'll take the time to help to find the right program and situation for you. So I want to thank you. Is there anything else you want to add before we close out the show?
I think that's it.
Okay.
Yeah, I think just to give people encouragement. If you want to be a home buyer, you can be.
Okay.
If you've got credit issues, there's fixes for that too. So we can talk about all the things.
And I'm just going to tag on that. So even if you have credit issues, meet with a lender in advance and discuss how to resolve or to get those obstacles put aside for maybe 6 months or down the year. It's kind of like a planning process. So
Yeah.
I thank you very much, Jeffrey, for joining us. And I hope everybody got something out of the show. And comment below if there's any other questions or things. But thank you again.
Yep.
So if you like this video and you found it valuable, please subscribe to our YouTube channel and like it. And remember, it's your home, your lifestyle, and we are your real estate team.